So welcome to the 17th CII Mutual Fund Summit. I believe this is the first one we're doing in person after the pandemic. So a round of applause for that. That's excellent. We're back here on ground. Mutual Fund Sahi Hai was a slogan which started, I believe, in 2017 to market the idea of mutual funds as a constant form of investments to a population that is absolutely in love with their fixed deposits. The pandemic, of course, wreaked havoc, but it really did a lot to give a shot in the arm, at least for this asset class. And we've seen that happening in the spurt in AUMs in the last few years, 10x in the last 5 years, double, in the last 2 years. And that has stood the test of time. That one marketing slogan has gone beyond just being a catchy theme of mutual fund Sahi Hai. We have the who's who of the industry with us today, and it's going to be interesting to know at what juncture we stand at a time when now the idea of investing in a mutual fund has gone beyond the top cities, beyond a certain section of society, far into different parts of the country. So that's one big advantage. But we're also standing at a time which is going to be challenging economically for the globe, for India, for savings and investments. What are the kind of preferences of investors we see and what are the challenges ahead? So let me begin with the Mr. Nilesh Shah on your view of where we stand right now in terms of the mindset of investors towards mutual funds.
So thank you, CII, for having me over here. And I really don't know where we are standing, but I know where we were and where we should be going. So when I was a kid, हिंदी फिल्म में हमेशा ऐसे सीन देखता था कि लड़की का बाप अपनी पगड़ी डाल देता है किसी के पाँव में कि मेरी इज्जत आपके पाँव में है. That was my India, where borrowing money to celebrate occasions like marriage or kids' education was needed. I want to go a scenario where ऐसा कोई मूवी में सीन हो और सडनली हीरो आके बोलता है ये करने की ज़रूरत नहीं है, आपने म्यूचुअल फंड में इन्वेस्टमेंट किया था वो रिडीम कर दो. बस वो जर्नी हो जाए तो हमारा धन्य हो जाएगा. And I think we are on the right course. In my previous organization, Axis Bank, there was a branch manager called Pradeep Agarwal in Delhi. So I used to tell everyone कि SIP करो, SIP करो. And then he said, मैंने अपना तो SIP कर लिया है, मेरी बेटियों के लिए कर लिया है, वाइफ के लिए कर लिया है, तो ऐसे अभी आपकी मेड के लिए, ड्राइवर के लिए करो. He did SIP for his driver, and when he got transferred to Mumbai, driver stayed back in Delhi, but SIP was with this gentleman. Sometime back, he came to give invite for his daughter's wedding and said, if I can get that money. Pradeep bhai just opened the app, punched the redemption and said, 4.5 lakh रुपए कल 2 दिन के अंदर आपके बैंक अकाउंट में जमा हो जाएगा. I mean, that guy was crying. खुशी के आंसू थे. बिकॉज 4.5 लाख रुपए उनके लिए बड़ी बात है. सेकंड 2 दिन में पैसा बैंक अकाउंट में मिल जाए वो भी उससे बड़ी बात है. There are more than 1.8 crore Indians who have lost close to 2 lakh crore in just last 20 years in collective investment scheme, from PSCL of Nirmal Singh Bangu to City Limousine to so many others. We have to serve those people so that हिंदी फिल्म में ऐसे सीन आने बंद हो जाए.
That's a new marketing campaign you've thought of, and that we might see next. Let's talk about that. So there's no doubt it has changed lives. It will continue to change lives. Let me come to you, Mr. Chandok. There's also no doubt that it has been a tough 20 to 22 odd months in the markets. Returns have been flat. People might not be very excited looking at what their SIPs are doing for them or their investments are doing for them. Is that pressure building up, or is the concept of which has been drilled down. Invest for the long term. Don't act in a knee-jerk fashion. Is that enduring?
Thanks, Tamanna, and thank you to CII for having me for today's event. Indeed, the fantastic picture that Nilesh painted, as he described the transformation that is happening, indeed is happening when it comes to the systematic investment side of the mutual fund industry. And we've clearly seen here that despite difficulties in the last 2 years, adverse returns, this has only grown compared to where we were 2 years back, where we are today. Every few months, I note that, we hit a new record. So even as we speak, we've just hit a new record of the growth that is happening with respect to the systematic investments into mutual funds. And it is thanks to this, I would say, experience, because you cannot sustain just by a slogan or a campaign which does not back it up with performance. So I think thanks to the experience and performance that the industry has delivered to the investors, that there is confidence in this this kind of an offering. And there is also confidence in the underlying economy of the country. Eventually, if that does well, only then the stocks will do well and mutual funds eventually will do well. So I think it's a clear vote of confidence on the prospects of the country, the manner in which the industry has sort of given an experience to the investor, and therefore month on month, despite adverse period, people are seeing this as a long-term story for themselves, and not probably using every downtime. And then we saw some data in the earlier session as well, redoubling their commitments to the market. So every time there is a sluggishness or a downturn, we see more and more investors coming and redoubling, and that's why SIPs are hitting record numbers.
Is it also a factor, Mr. Munot, I will come to this, of TINA? This is going to be a phrase everyone's going to talk about for the next 1 year. There is no alternative. We're going into election season, so TINA is going to be the catchphrase. Is it also TINA as far as SIPs and mutual funds are concerned, over time, consistently, post-tax returns, which has shored up confidence? And is there a bit of a threat to that, TINA, with interest rates back up again?
We have seen those cycles many times, but what has happened for us in the industry, Nilesh Bhai narrated their story, the most heartening thing we get as an industry whenever we travel across the country is meeting these kind of people who did 1,000, 2,000, 5,000 rupee per month of SIP, and today when they are able to see a statement with lakhs of rupees in their account. And then we get that story every day as Nilesh Bhai narrated. So 3 or 4 things that have happened which has led to this substantial increase in the trust. The total SIPs 5 years back for 7,000 crores. It took us 20 years of hard work for the industry to reach a mark of 7,000 crore or close to $1 billion. In the last 5 years, we have doubled that from 7,000 to 14,000 crores. The number of SIPs have gone from 60 lakh 10 years back to 6.5 crores today. It's a 10x increase, and Anu showed those numbers, how millennials or across all strata of society, you are seeing that. What has really worked for us are 3 or 4 things. The number one is the track record. Now, people have seen interest rate cycles. People have seen economic cycles, business cycles, political cycles, global, I think, ups and downs. What we have seen recently, we have seen many times. But now you have funds going back 10, 15, 20, 25, 30 years. Next year, HDFC Balance Advantage would be like 30 years. FlexiCap another year's time, 2 years' time will be 30. You've got 25, 30 years of track record across all these ups and downs of what the wealth that has got created. Second is the trust because of the transparency. Thanks to the regulation and the industry put together, this is the most transparent financial product in the world. You don't get this kind of transparency. What we disclose on a daily basis, on a monthly basis, is of a different order altogether. And third, I think, is technology. What Anu showed that how easy it has become to invest or maybe transact, and thanks to the efforts of people sitting next to me. I think some of these things are on top of that, the mutual fund Sahiya campaign and the 2 basis point all of us
very seriously spending on like how do we really go to the every nook and corner of the country and convince people that if you don't do this, how are you going to create wealth over a long period of time? So this is the year in Amritkal, first year, India will become the most populous country in the world. We have always been the largest democracy in the world. This is the year we are also getting the crown of the most populous nation in the world. But imagine in 10 or 20 or 30 years time, if we don't focus on ensuring that there is a wider equity participation, how are we going to take care of the older age people, right? So we have to work together and take this to a much higher level and move beyond thinking about where the interest rates would be next 1 or 2 quarters, what will happen to the GDP, what will happen to the corporate earnings or so on and so forth. We have to take that leap of faith that in what we have done as a nation and economy in the last 25 years, next 25 years in the Amritkal are only going to get better. And we have to ensure that from 3.75 crore unique investors today, we take it to 10x in the next 10 years.
We already are officially the most populous country in the world. And you're absolutely right. We are going to have to figure out a way to also support the expanse of that population. That's where SIPs come in. Mr. Kulkarni, I want to come to you on the changes you've seen in the mindset of the investor pre and post pandemic. I mean, that's sort of a watershed landmark for people for a lot of things. People decided to change their lives, their outlook on things. Did it also impact an outlook on investments? And did you see the effects of that?
Okay, so once again, thank you, CII, for getting me on this panel. And so to answer your question, I don't think pandemic has much to do with the change of behavior. I think it's more to do with the fact that the overall knowledge level across the industry, from retail investors to HNI investors, have really gone up substantially. I think today information is available freely. People do read a lot. Gone are the times when you would go to a customer and say, buy this, and he would buy it blindly. Today, the client does ask you many, many questions because he or she is also prepared to decide where they want to invest the money. So the big change that I see is that 5 years back, maybe the vision was more short-term oriented. Today, the vision is much more long-term oriented. People are actually talking about SIPs earlier would be signed up for 5 years or 10 years or 3 years. Today, SIPs are being signed for lifetime. So that's a big change. They're willing to commit for their future generations. What possibly insurance tells you to do, that's their surrogacy, they're doing it through the mutual fund route today. We talk to a lot of clients, MNHIs, normal common customers when they come for investor awareness programs. Today, it's heartening to note that people are not saying that agar market gir gaya, to main paise nikalu kya. They are willing to say that acha market gir gaya to aisa suna hai ki hame zyada unit milte hain. So I think the whole concept and the behavior of people has changed substantially. And to that extent, I think that is the single determining factor why more clients are coming into the industry. And also the fact that they are willing to stick on for a much longer time. And just taking what Navneet said is very important. They've realized that this industry has gone through multiple cycles, not just economic, political, social, all kinds of ups and downs. And they've seen that this industry has given a return which is very, very good. And that's something which is driving. So when they go and tell 10 other people, why haven't you invested in mutual fund? Today, the acceptability of them putting in the money or writing a check is much higher than what it was 5 years back.
I mean, I'd just like to add one point. I think you said that are they competing and therefore no options. But I think increasingly as investors are getting mature, we are seeing that they look at asset allocation as an approach. So a fixed income is not the same as a mutual fund, particularly the equity-oriented ones. So it's an allocation towards a fixed income for a bit of their total investments, and then the rest of it goes into mutual funds. So it's not an or, it's an and scenario.
I think the big challenge, perhaps, and let me come to Mr. Nadella on this, for mutual funds came from a breed of investors who suddenly found themselves working from home with a lot of time and with a DIY mindset, who said that maybe I can, put in the research, put in the effort, and have more returns than what my mutual fund is giving me, what my current SIPs is giving me. Do you think that phase is over, or is it very much there and persisting?
Thank you, Tamanna. Thank you, Sandeep. Thank you, CI. See, the DIY culture is here to stay, is what we believe. The upwardly mobile and the millennials, are far more attuned to technology. And it is not to say that the pre-millennials were not. And I think, they are just as adept in using technology as the rest of us have been over a period of time. I think the tools, the tricks of the trade that are now so commonly available on almost every platform, I guess in varying degrees of effectiveness, provide a pretty level playing field for anyone to invest. And I think the point truly is, in my mind, less to do with, people who want to invest, get that far to actually a platform. They will invest any which way, even if not, there can be a drop-off of 5-10%. I think the larger problem is how do we get more people to that particular, pipeline, right? I guess what I'm trying to say is that, with still about 3.5 crore unique investors, we are very far from, where we ought to be. Growth rates of 20% increase in folios and all may look pretty impressive, but definitely not when we look at the potential to grow in terms of the population, the investable populace that we have in this country versus, what we have invested thus far. And I think that's probably what one of the things that we need to address is effectively leverage technology, not just for onboarding and retention and stopping the detractors from moving away. That I think in a way is happening in a reasonably effective manner. But the idea is how do we get the next 20, 30, 40 crore people to that particular pipeline to start using technology, right? And that I think is an area where as an industry, we all still have to collectively do a lot. I think it's been almost 10, 12 years since the advent of MOOCs, which is effectively, massive online courses. How do we get the youngsters right from the college, right from the, time when they actually are getting literate, not just study about science and social, but also about financial literacy. And if we don't get the individuals at that point in time hooked on to the importance of financial investing, not just saving, I think we're going to, miss a massive amount of people, because then you're going to only find those people who genuinely have the interest to invest in which way. So broadly speaking, I think, it's about getting the next 30, 40 crore people to look at this industry even before they start investing. There are tools to invest, right? That's the first one. And the second one, I think, is not to be myopic in our view that, sorry, I'm probably being a little contrarian. I think, kudos to this industry has done tremendously well, but I think there is still potential to do a lot more. I think one such area is probably not to be myopic to think that there is no competing asset class. You look at world over, one of the reasons why the US and, particularly the US, there's been a marked decline in the mutual fund industry growth percentages. It used to grow at a CAGR of 5.8%. Now it's down to a little around 2.5%, projected for the next 5 to 7 years. That's not because people lost interest in mutual funds, but there are a lot of competing asset classes, which, have been vying the interest of an investor. Now in India, probably we're not there with every one of them. For example, you can buy fractionalized art. You may not have the ability to buy a Picasso, but you can buy 2 units of a Picasso's art. That's possible in the US. You can buy music rights of your favorite singer because you can earn royalties for the next 30 years, so on and so forth. You can invest in pre-IPO shares. You can invest in the VC-funded investments. Now, these are all the asset classes that have been vying the West. Now, is that something very far away in India? Probably not. I think, we shouldn't be thinking that, SIP and mutual fund is going to be the only alternative. For now, it is. All I'm saying is I think, we need to find ways and means to get a lot more people attracted to the industry well before other asset classes come in, and keep an absolute eye in terms of what are the competing classes which can actually also take mutual funds side.
What's on your horizon when you talk about competing asset classes? Because one of them that I don't even know if I can say it competed, but the whole crypto phase, it came and went with one budget announcement. That industry the interest in it evaporated overnight with regulatory fear. And we are a very tightly regulated market, and there seems to be no signs that will change anytime soon. So I'm just interested in knowing, when you say that there are going to be other competing asset classes, is there anything specific in mind you see on the Indian horizon?
Sure. See, cryptos is a very different ballgame altogether. Okay, it's not the same as the asset classes such as, for example, REITs and InvITs, where you can have fractionalized ownership on large properties, right, and infrastructure projects, which otherwise you cannot by yourself own. Similarly, you extend the logic to other fractionalized investment opportunities such as art that I was talking about, or music, or PIPO shares, etc., which can easily be traded. It's not so easy in India at this point in time, but you can easily do so in the rest of the world, right? So there are other legal asset classes which are not yet that popular in India, which can become popular. Now, that may not be the asset class most of us in this room could be very interested in for a foreseeable future. But we can't say the same thing about the millennials, because they have a long tenure of investment life ahead of them, and they are risk-taking. They chase higher alpha. And I think as an industry, we need to brace ourselves to, get to that stage, where that might happen, and then we are ready to take that head on.
Tamanna, sorry, because you asked a DIY question, I have something to say. DIY is good, but assisted DIY is better. Okay, and let me give you an example. When the market goes from, let's just take a random number, 30,000 to 20,000, you need a shoulder to cry on. You can't cry with your head on a computer laptop. Okay, let's be very clear. So I think what Karan does in IFL, yeah, that's assisted DIY. Okay, and that's the model which I think everybody, especially the millennials and new people who like to play with the gizmos, should really be looking at assisted DIY.
Suddenly giving the sense that no one here is a millennial or likes to play on their gizmos. Some might take offense to that, but it's a good segue for me to speak to Karan. A lot of people crying on your shoulders last couple of years.
It's a question or observation?
Question mark, inflection of a question mark at the end of that sentence.
No, so I think honestly, investors are very well, in the sense you always have new investors, but overall investors are matured. And I think if you just look at the last 25 years, if you go back to 97, and assuming one of us is a Nostradamus in this room, hopefully we can find somebody. And somebody predicted in the year 97 that 99, the tech meltdown is going to happen, 2001, WTC attacks are going to happen, 2003, Parliament attacks are going to happen, 2008, 2611, GFC, global financial crisis, 2013, currency tapering, now COVID, we can keep going on. Has somebody told us all of this in the year 97, I think, I'm a Marwadi from Calcutta, I would have hidden my money in my pillows and gone to sleep, right? If somebody told me in the next 25 years, all of this is going to happen, and at the end of the 25th year for 2 years, nobody will be able to get out of the house. Reality, all of this has happened in the last 25 years. All the volatilities come through, and yet on investments, broadly, we ended up somewhere in the region of 10-11% post-tax. So I think investors get it. They've seen life for the last 25-30 years. They've seen the volatility. Obviously, tools for asset allocation, disproportionate amount of risk need to be there. But I don't think so. People kind of just lose their sleep over obviously, there's a really sharp correction from 30,000 to 20,000, and people have gone and put in their entire 100 rupees into equities at that point in time. There can be a little bit of calming which is needed, but overall, I think it's a good space. And I think generally speaking, to be fair, I think India in 2023 is very different from India in 2009. The maturity of the investor is very, very different.
Mr. Mohanty, just right now, Karan listed a whole laundry list of terrors in the last several years. There are some predictions that 2023, 2024 is going to be the onset of a global recession. Let's hope that's a completely wrong prediction. But we're already seeing a sort of a variation in the way Indians spend. The number of people buying luxury cars, the pace at that growth is much higher than those buying two-wheelers, for example. Luxury apartment sales sell out in an hour, but affordable housing is still struggling. When we're all talking in this room about expanding reach, broadening the market, do you see a challenge there?
See, let's reflect on what's happened. And if you go back to Karan's statement as to 2009, if somebody would have said this, I would have also kept my money in the bank or in my house, not the bank itself. But, there is now a different world. There used to be before Christ and after Christ. It is now before COVID and after COVID. That's the reality. Okay. Now, if somebody would have told me that there is a virus which is ruling the world, and we are shut in our houses because this has now stopped the economic activity of the world at one go. Even world-wise also this had not happened. This is what has happened. In 2 years, we were sitting in our houses scared for our life. That's like a science fiction movie. Trust me, the transformer will come now someday. That's my belief. Okay. But all of us have got this chance to reflect on our lives in our small spaces in our houses, and in Mumbai it's even smaller. And we've come out of it in a very different vigor towards life. We've got this chance to restructure our financial statements or how we want to live life, and that's why this is an outcome, right? Today the Mumbai airport is looking like a bus stop, right? And 2 years ago we were wearing masks. So people have looked at it very differently, and from medical insurance to mutual funds, their approach to every investments is very different. We're talking about 3.5 crore folios. If you break that down into 26 years of mutual fund and 1 year of mutual fund, it was 2.5 crores and 1 crore. And let's project the next 10 years. We're talking about 60% of world population under 30 in this country. And that's where the thing comes in. My son, who is 24, I'm afraid will stand up and say, Dad, you don't have a single product for me. And somewhere what Sreekanth is saying is something which we need to reflect. We are not the only people waiting for investments to come, but we can become the only investment vehicle, because we can become TINA, because we can give all these asset classes through us. We are a pass-through vehicle. If we stand as an unbiased manufacturer, catering to the needs of the investor, the distribution landscape today is skilled enough to give it to them. It is not a distribution landscape which was there in 2009. Their knowledge level, their approach towards investing is totally different. So it's up to the manufacturer now to remain very unbiased and understand this change in demography. And if we can cater to that in a rightful fiduciary manner, we can become TINA, is my firm belief.